All right, good morning, everyone. So it is 11 o'clock on the 6th of April. We are doing our currency call today being Wednesday. So we are looking at the dollar index. We've seen massive strength on the dollar overnight. So I'll go through why that actually happened. And also we'll be looking at the pound dollar together with the euro pound, a review of the euro pound from what we saw yesterday as well. So again, this is recorded live. Traders Club members are attending this live. And if you are watching us on YouTube, then this is recorded and released at a later time for YouTube. If you haven't already, make sure you join the Traders Club. The links are in the comments below. All right, so Traders Club members, if you have any questions, please feel free to put them into the chat, or we do have our platform there. I've been uploading some updates from our call last night. So we had a call last night where we were looking at the Aussie dollar reversal, the Kiwi dollar reversal, the Euro dollar breaking lower. A lot of trade ideas shared last night. Just posted up the review there. If you actually jumped into any of those trades, put it in the platform, let me know. And we can also do some review of trades that you have looked or are thinking about. With all that said, as usual, first things before we kick it off, a quick disclaimer, any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of myself, so please remember to do your own analysis prior to entering any trades. All right, so with that, let's look at the news here on Forex Factory with the focus today on the dollar, on the pound dollar, but I'll go through what else happened. Pound dollar, we do have the construction PMI for today at 4:30 GMT plus 8, looking like a small drop, but I don't think this will influence the pound dollar too much, looking to go from a 59.1 to a 58. So a small drop there on the pound dollar construction PMI. Not a big change expected there. We do have other news, not big. FOMC meeting minutes on Thursday morning at 2 a.m. So watch out for that. I don't think, again, like I was telling club members last night, meeting minutes, there's a bit more detail into what happened. We already know the FOMC increased rates by 25 basis points the last time they met. Expectation was 50, but the general scope was that, or general idea was that because of the Russia-Ukraine conflict, they've decided to be a little bit more conservative and only do a 25 basis point instead of the 50. But there has been talk since then up to last night that they need to do a 50 basis point. Inflation is running hot and extremely high, historic high levels. So the meeting minutes will actually give us a bit of insight into how close were they between 50 or 25 basis point increase in terms of rates. I don't think this will move prices too much at this point, but it'll be interesting to find out. So if you're not used to trading at 2 a.m. in the morning, then I would say stay out of the FOMC meeting minutes. You don't have to wake up to try and trade FOMC meeting minutes. Not likely to be a big price mover at this point. With that, what else do we have for the pound dollar? We do have some members speaking, not going to do too much, and then not much else. Into next week for the pound dollar, we do have the GDP number month on month on Monday for the UK at a 0.8%. Previously, it went from a minus 0.2 to a 0.8. So we're looking like the pound GDP might increase at this point. Forecast will come later into the week, so pay attention to that. And then on Tuesday, we do have employment numbers coming from the UK. So I think we're going to see a bit of an improvement in terms of the employment numbers there. Improvement, so we might see some pound dollar strength come into play early into next week. US CPI numbers for next week as well. And then New Zealand cash rates, I'll tell you more about that next week. Pound CPI year on year was 6.2%. You can see it's increased quite significantly. The last time they reported it in March, from a 5.5, it went to a 6.2. At this point, the UK, the Bank of England has been increasing rates. We might not see the impact of this CPI number being applied yet. So we might still see inflation running quite high. So maybe a 6.5 could still be possible, forcing the Bank of England into further rate hikes again. And then into Thursday, some US news. I'll tell you more about that next week. So remember, now we do have the pound CPI number next week on Wednesday, year on year at 6.2. I can tell you more about that next week as well as we get the forecast. But at this point, if you're getting into any trades, in particular for the pound dollar, I think the focus is not so much on any news coming from the UK, but what's coming from the US. So last night, what we actually saw, some news release, was Fed's Brainard actually said that we might see, they should see further or stronger or sooner balance sheet reduction at a rapid pace, and also the likelihood that we're going to see a 50 basis point increase more likely, right? So also another FOMC member came out and said no question that accommodative policy has to be removed, and 50 basis point will be the option we have to consider. So again, they're bringing that whole idea of 50 basis points back into the front line. What actually happened because of this, all this talk about further, more aggressive rate increase, removing of accommodative policies, reducing balance sheet at a faster pace. What actually happened here was that we saw the dollar index go from that 98.90 level straight towards that 99.50 level, right? So the last time we spoke about this yesterday, I was actually saying that we're likely to see the dollar sit, maybe test a little bit lower and shoot up towards first that 99.30 and possibly towards that 99.50. Right now it's gone to 99.50. What I anticipate here for the dollar is that it's going to sit in a little bit of a consolidation, possibly break towards the upside from the recent news or recent sentiment, but it's going to need a further push, right? The comments, the rumors are all there. We need a further push for that to move higher. You can see that 99.50 has held since March. It hit once and it retraced, came very close once and twice, and it's retraced. Now again at this level, it could break, but it's going to need further rumors, further comments, or actual policy action coming from the FOMC to push this towards the upside. From this point, if I do zoom out into the daily time frame and actually go quite far out, you can see that the last time we broke above that 99.50 was back in Feb 2020, right? Feb 2020, it went towards that 99.80 level, or even a round number of 100. So I'll put a line there at 100. I'll put a line there at 100 just to have a reference point. The last time it broke up from this point, it went close, went to 99.80, 99.90, and had that big retracement back down. Again, in 2020, that was the pandemic. That's why we saw that big volatility in the dollar index. So just be a bit mindful about that. But at this 99.50 level, it seems to be quite a strong level here, right? So with that said, anticipation for the dollar index is that if it can break above this 99.50 level, then we're likely to see it move towards that 100 level. So just to show you that here, it could move towards the 100 level. But I think that for this to push that significantly towards the upside, we need to see action from the FOMC or actual maybe Jerome Powell coming out and say that, they're really considering that 50 basis point to push it towards the upside, or alternatively is to see the other currency pairs, other currencies weaken against the dollar. So because of what's happening in the Eurozone, because of what's happening in other countries with their own inflations running hot, that could lead to them weakening against the dollar, then dollar being stronger in relative terms. Not that the dollar is getting stronger, but in relative terms to the other pairs, it gets stronger, and that could see it push up towards that 100 level, right? So with that, overall bias is that we should be seeing a little bit of consolidation now, and then a push towards dollar strength. So that makes it a little bit easier when we look at the pound dollar. So pound dollar here on the H4 time frame, the last time we looked at this was, well, in March or late March. We were looking at it breaking up above this 1.31 level towards that 1.32. It did that, came close and came back down again. Just last night, I was telling our club members that 1.31 will be a key level. I was looking for it to bounce up and possibly towards that 1.32 before selling down. What happened is now that it's broken below this 1.31. I'm looking again, remember, consolidation in the dollar strength before further dollar strength. So we might see it sit this level here. What happened on the end of March, 29th of March, where it came down towards 1.3059 and then bounced straight back up. I would not be looking for any trades on the pound dollar right now unless it can break below this level, right? Unless it can break below this 1.3059, then you could be looking for a short-term sell if it does bounce back up. So I'll show you here, if it does break below that 1.3059, you could be looking for a short-term sell. So about 1.30, below 1.3050, so 1.3049, let's say a stop loss of about 20 pips, a take profit towards this point of 40 pips, a 1:2 risk reward ratio towards the downside for the pound dollar if it breaks below this 1.3059 or 1.3060 level, right? If it doesn't, if it now sits across and it bounces back up, I wouldn't be looking for anything between this point all the way to 1.31. I would say if it does break above 1.31, then you can be looking for that buying opportunity, say 1.3115, about that point, towards the recent high levels, about 50 pips, stop loss again about 20 pips. So you're looking at a 1:2, 1:2.5 risk reward ratio towards the upside, towards quite a safe take profit level of those recent points. We're looking for that repeat of what happened here, that push, that bounce above 1.31 and push towards the recent high points. This could be quite a good trade idea as well. So at this point for the pound dollar, don't do anything yet. Look for it to either break lower, break below that 1.3060 level, or look for it to bounce up, break above that 1.31 before looking for that buying opportunity. Quite flexible on the pound dollar for this trade opportunity or this trade idea here. With that, we're looking at the euro pound. Looking at the euro pound, the idea, or one of the thoughts we had last night, was to sell down. One of the signals we sent to the club members, trade signals that we sent to club members, was to sell the euro pound down as it broke below this 8351 level. So we're still looking at that as a possible trade idea, mainly because if we do see that dollar strength continue, likely to drag the euro dollar down. As it drags the euro dollar down, we could see that drag the euro pound down. And if we do see the pound dollar, sit at this level or bounce up slightly, that could also push the euro pound towards the downside. So Again, if you check yesterday's video, the trade idea still holds. What we were looking at was 8343 to sell, 15-20 pip stop loss for a 40 pip take profit level, a 1:2 risk reward ratio towards the downside. If you haven't already jumped into the trade, then I would say look for this candle to close out a little bit stronger towards the downside, maybe below 83, I would say below 8333, then look to sell. So it shows some momentum, some further momentum towards the downside, then look to sell towards that 8300 support level. So quite straightforward there on the euro pound. We've been looking at further, just doing a quick review, looking at the euro dollar dropping further. We've seen that. So looking at that to drag it down. So euro dollar, we were looking for a reaction at 1.0945. It's broken that level. So this straddle or buying opportunity will take that away. Now we're looking for it to go down towards that 1.0860 level. I think we might see a bit of consolidation, a bit of a bounce before further downside. So if you haven't already jumped into the euro dollar on the H4 time frame there, stay out for now. Let it bounce, let it consolidate, let it wait for it to break a little bit lower before getting in. If you have already jumped into the euro dollar, then possibly look to, you might consider moving your stop loss down towards break even or securing some profits, or you could even be looking to get out of the trade, reevaluate before jumping into the next trade again, right? So with all that said, quite a few trade ideas we've had on the euro dollar, the pound dollar, and also the euro pound. Club members, check out the chat that we have on the platform there, sharing a couple more trade ideas there as well. For now, trade safe, trade well, take care, bye-bye.